Asian markets are muddling through this morning, concerned by high inflation in Japan, but also the prospect of more interest rate hikes in the US. The US Federal Reserve is set to announce another potential increase in interest rates next week, and strong new jobs figures are making traders in Asia nervous that another hike is in the works. If that wasn't enough to worry about, China's economy is also struggling to come back to pre-pandemic growth, and Beijing's attempts at stimulating growth have so far come up short. Meanwhile, the Dow Jones Industrial Average extended its longest winning streak since 2017 off the back of strong earnings from drug maker Johnson & Johnson, but tech stocks fell after disappointing figures from Netflix and Tesla. For more on this now, let's go to Mario Unali. He is Senior Portfolio Manager at hedge fund firm Kairos Partners in Milan. Thank you very much for joining us today. So, Mario, after a stellar performance that equities had recently, are we heading into a pause or a taking profit phase rather? Can this rally be sustained?
Look, I think markets got pretty much everything they wanted in the first half of the year. They got decent growth in GDP in the US. They got lower inflation expectations around the world. And so equities were basically free to go up and recover most of last year's losses. Now, if we want to see another leg up in markets, this is going to be, in my opinion, all about corporate earnings. And this is what the market is looking for in order to validate the thesis of soft landing in the US. Bear in mind, though, we have very little evidence over the years of economies being able to get out of inflationary pressures without either a big T cap in unemployment or a full-blown recession. So as an investor, I'm trying to be not complacent at all here.
Very difficult to attain that soft landing. And Mario, a question on the dollar as well. What about the dollar? Because obviously we've seen a sharp dollar sell-off in the last few weeks. Now it's bounced back a little this week. Are we expecting a prolonged dollar weakness? And what would this mean for emerging market currencies, for example?
Yeah, look, I mean, if you want to be bullish on emerging markets and some of the hottest commodities as well, like oil, copper, and so on and so forth, you definitely need to see a weak dollar, and not necessarily much weaker from here, but definitely not, too strong either. Look, I mean, there is still a big differential in interest rates between the US and Europe. There is still a big difference in monetary policy approach between the Fed and the ECB, and that's somewhat bearish for the dollar. On the other hand, should that recession scenario materialize in the US, the dollar is very likely to go up. So that's something to keep in mind as well.
Mario Unali, thank you very much for your insights. And now let's go to the top stories from around the world. China has unveiled plans to boost the sales of cars and electronics as it looks to shore up a sluggish economy. The measures include raising annual car purchase quotas and enhancing consumer credit support. China's economic recovery has lost steam in the second quarter, prompting Beijing to announce a series of growth-boosting measures. India has banned the exports of non-basmati white rice with immediate effect, raising fears of further inflation on global food markets. The decision comes as New Delhi's latest effort to keep domestic prices at comfortable levels ahead of next year's general election. Global rice prices have already soared to decade highs as the world grapples with the impact of the war in Ukraine. And Japan's inflation has risen more than expected in June, putting more pressure on the Bank of Japan to unwind its ultra-loose monetary policy. Consumer prices rose 3.3% from a year ago, outpacing the US figure for the first time in 8 years. Earlier this week, the government raised its overall inflation forecast for this fiscal year to 2.6%.